Today, we are proposing a change that may seem technical, but will have an important impact in making our capital markets more efficient. We propose to move from a T+1 to a from a T+2 to a T+1 settlement cycle for securities transactions in the Union by 11 October 2027. This means that an EU market participant selling a share or a bond on a Monday will get their money by Tuesday, close of business, and the buyer will get the share or bond at the same time. We are not just proposing an adjustment to existing processes. Shortening the settlement cycle in the EU by 1 day will reduce risks and costs and will make our capital markets more efficient, more liquid, and more harmonized. Another important step towards the Savings and Investments Union. Exactly 10 years ago, EU capital markets were pioneering the shift to T+2 settlement. Since then, technology advanced and settlement systems have evolved, and the US, Canada, Mexico, India, and China have now moved to T+1. The UK and Switzerland are also preparing their respective transitions. A move to T+1 in the EU will thus align us with those jurisdictions and avoid the substantial costs linked to the misalignment. The shortening of the settlement cycle can bring important benefits to the Savings and Investments Union, and it will contribute to the competitiveness of EU capital markets. All market participants will see the benefits of moving to T+1. For investors, particularly those in the retail sector, the benefits are clear. For example, retail investors will experience faster access to their funds and securities, which is a fundamental part of the trust and fairness we strive to maintain in our markets. A shorter settlement cycle also means that cash and securities will be freed up more quickly, allowing investors to reinvest sooner, creating opportunities for more trading and enhancing the liquidity of our capital markets. One of the most evident benefits of moving to T+1 for market participants is reducing counterparty risk. Reducing the settlement cycle to just 1 day means that there is less risk of any unforeseen events, whether a market disruption or a failure on the part of a counterparty, impacting the completion of the transaction. More concretely, this means a significant reduction in margin requirements for market participants. This change, however, will not be without its challenges. This is why the EU T+1 governance, composed of ESMA, the ECB and the Commission, as well as the financial industry, was set up on the 22nd January. It will pool efforts of the public and private sectors in view of ensuring a smooth transition to T+1. This is why we are setting a clear target date of 11 October 2027 for the full transition to T+1, following the recommendation by ESMA in its report. It allows approximately 1 year to develop and agree on solutions, 1 year for implementation, and 1 year for testing. This is what market participants asked for. Given the high level of interconnectedness between EU capital markets and those of the United Kingdom and Switzerland, it makes a lot of sense to have a coordinated approach across the European continent and that we move forward together to T+1. Coordinating our efforts benefits us all. There will be more harmonization of settlement cycles and less unnecessary costs for market participants. T+1 is of mutual interest for the UK, Switzerland and the EU. As we move forward, we will also must keep our eyes on the future. While T+1 is an important step, we must keep in mind that other international markets are already thinking of same-day or even instantaneous settlement, the so-called T+0. Today's proposal gives a deadline of 1 business day for settlement, meaning that market participants can settle even faster if they want to. It's important that we continue to progress, and I would encourage market participants to evaluate emerging trends, such as blockchain and distributed ledger technology, that could shorten the settlement cycle further and make our markets even more efficient. And to conclude, I would like to emphasize that the move to T+1 represents a necessary step in promoting efficient financial markets, bringing more speed, more liquidity, and less costs for market participants. This helps create the conditions for us to make the most out of the Savings and Investments Union. Thank you.
Many thanks, Commissioner. We'll now open the floor for your questions.